There's a lot happening, and with all this discussion in Parliament and the kind of optimism we're seeing from the CS, is that this raft of proposals that you're seeing on the dailies this morning are going to pass by the end of today.
Yes.
Some of them affect banking directly. We've, even I as a media, we can actually take a bit of the blame in the fact that we've discussed too much the VAT imposition on petroleum products, but looking at the raft of proposals, quite a lot will affect even the banking sector. Bank charges, ATM withdrawals, check deposits, over-the-counter withdrawals now will attract a 20% tax. Now that is huge, even for banking business.
Right.
Even on a communication perspective, from a communications perspective, have the banks even communicated this, or are we just expecting to see what we are seeing probably with the fuel tax, that that burden is simply shifted to the consumer?
Yes, so I think what we probably need to step back and appreciate that the discomfort that we're seeing coming out from the public is that we're trying to understand where these taxes are going to go. So I think Kenyans are very patriotic, we're industrious, we're hardworking people. So I don't think people are concerned about taxes increasing or paying taxes. I think they're concerned about the utilization of that income that's raised. So indeed, like you rightly say, communication is important. People want to see, as I increase my taxes, as I pay more to the government, how is this money benefiting me? You mentioned that banks will be affected. Yes, they'll be affected because their customers are going to be affected. These taxes that we're talking about are excise. So an excise tax is basically a tax on consumption, which indeed is passed on to the ultimate consumer.
So the banks are no burden at all, this one?
Well, we have been lobbying. I think we've come out very strongly around the Robin Hood tax. I'm sure you've seen, I think KBA was the most vocal, pushing back to the National Treasury, really ensuring that if we're going to increase these taxes, you need to increase taxes in an enabling environment. I think we're coming out from a political season. 2017 was very difficult for business. It was very difficult for households. So adding taxes in this type of an environment might actually affect the economy. Yes,
but because some people are saying banks have been recording reasonable profits, telcos the same. If this charges because even mobile money will attract some taxes, wouldn't it be fair that this burden is shared, if at all it gets to that, instead of just simply transferring everything to the consumer?
Well, banks already pay corporate taxes. So as banks are making money, they're actually also paying back to the government in terms of corporate taxes. I think how we try to intervene is on lobbying. Because we know, like I said before, ultimately our customers are getting affected. So the more taxes you pay, the less disposable income you pay, the less income your businesses generate, and therefore less business for us. So we're really approaching it from that perspective.
Do you see a sense in which probably this, because these are very direct charges, ATM withdrawals, check deposits, over-the-counter withdrawals, that this could affect the amount of business people are willing to transact in banks?
It's actually quite unfortunate because it's going to shape behavior. Okay, so we're moving from paying excise duty as consumers of banking services. We're moving from paying 10% to paying 20%.
Which is double.
Which is doubling. So I think it's going to shape how people interact. I think hopefully it'll also bring on innovation in how products are designed.
Are you not scared as KBA that you might lose some business? We're talking about, we had gotten to a point where people had really welcomed the banking sector, because back 10 years ago, things were not the same. This time around, people have really embraced banking. Now, something like this has a potential to actually return us to a certain point we are not comfortable.
Yeah, it is a concern because we have seen, if you look at financial sector deepening, they have a survey called the FinAccess survey. And you rightly say over the last 5 to 10 years, we have seen people move from the informal financial sector to the formal and prudential financial sector. That means they're putting more trust in banks, they're putting more trust in MFIs. So when we see higher taxes in this formal space, it will erode the gains we have seen in Africa. In Africa, Kenya is #1 in terms of financial sector deepening, financial sector innovation, and it's something that we're very proud of. Our performance in the financial sector has led us to be rated very well in the World Bank index of countries to invest in. So a lot of these taxes and a lot of these policies that are coming through are concerning the banking industry. Of course, we were very vocal about the caps. So there's certain policies and legislations that are coming in that are actually affecting the financial sector, not just banks.
Are you tackling them proactively? Like now you expect there will be probably a slowdown in, as far as people embracing banking. KBAs, are you doing anything to counter that?
So we're doing many things. Indeed, we're engaging with Parliament on this issue. We're also trying to be proactive in working with consumers. There's a program that we have started called the Inuka Enterprise Program, and this program is specifically working with SMEs. In this very difficult enabling and operating environment, we realize SMEs need to be supported to be successful. So we created an online platform. It's a free program that business owners, entrepreneurs, people who are interested in starting their business can go online and learn about human resource management, legal issues, learn about how to develop a strategic plan. And we believe by going through this program, SMEs will be able to be better equipped to operate, to succeed in this very difficult operating environment, and also be able to attract capital. So, so far we have hundreds of people online. We're doing face-to-face training in Nairobi and Nakuru. So I think what we're trying to do is also, as we're engaging with government and the legislature, we're also supporting and working with our customers.
And it looks like you're now focusing more on entrepreneurs and people running small businesses. Then what happens to this common mwananchi who does not even run a business, or is just banking simply because my salary has to pass through a bank?
Well, the reason why the Inuka Enterprise Program is so focused on SMEs is they are the bedrock of our economy. When you look at where job growth is coming, when you look at where the productive growth within our economy and GDP impact comes, that's where SMEs, that's the space. And we need to support them. The micro people who employ 1 to 5 people, the small people who employ 20 and below, they're employing mwananchi, right? So it's really important that we support SMEs because of the caps on lending. SMEs are not they're not attracting as much capital from banks, so they're not borrowing as much.
But that slowdown, sorry to cut you short, that slowdown could partly be blamed on how the banks reacted to the cap in interest rates, the slowdown in lending, for example. Even the SMEs, you are not that welcoming to them. What is changing now?
So actually, that's a myth. Kenya, when we looked at the research, Kenya was #1 in Africa in terms of the amount of bank capital that goes to SMEs. That means if you look at all the countries on the continent, banks in Kenya were more active in lending to small business.
Despite the slowdown.
This is before the caps. So we were doing very well, actually.
But once the caps came
in, then you then say, as a financier or any business owner, you say, where can I put my money where I can get a decent return? I was just looking at the paper today. Treasury is borrowing at 12.6%. If the government is borrowing at 12.6% and the market lending rate is 13%, as a business owner, you then have to make a decision. Do I lend to the government, which is
less risky,
or do I lend to Fred, who wants to start a business and he's never done it before? So you then make those decisions, and that's why you can see banks are probably lending more to the government than they're lending to SMEs.
So with this Inuka plan, what has changed? Because the rate cap is still there.
Right. So what has changed is we're trying to help SMEs be better at how they operate their business. If you're better at how you operate your business, if you meet all the conditions that banks already have, then the likelihood of you being successful in that loan application is higher.
But the conditions
a lot of the SMEs that we're actually working with, I mentioned we're working with hundreds of them. A lot of them didn't even have a strategic plan. They didn't even have cash flow projections. And these are simple things that if you go to business school, you learn it. But most entrepreneurs, you do it because you have passion. You do it because you're really interested in something, not because you have a degree in business management. So just supporting them, I think, really has made a difference.
Some would say that you're doing this simply because you've realized that your loan books are growing smaller with a slowdown in lending. You had reduced the conditions you were setting for any borrower were just too stringent that not many people could meet them. And the only option you had was government. Yes, less risky, but now is when you're discovering as the Bankers Association that no, we need to widen the net a little bit and survive within the prevailing market conditions.
You make it sound negative, but I think it's a positive trend. I think it's good. I think it's good. Well, no, I think it's okay. Banks play a significant role in the economy, right? But no, I know we all love to hear
the way they've treated Kenyans immediately after the introduction of the interest rate caps has not been very nice.
Oh, really?
Let's be honest.
Well, I don't know. But what I wanted to say was, I think everybody has a sense of appreciation of the role SMEs are playing in an economy. It's not unique to Kenya. Even if you look at the US, you'll see a lot of policies that are coming on board to support the SME. If you look at China, the Bank of China has introduced new incentives to incentivize lenders to support SME. Rwanda as well. India as well. So it's not a Kenya situation. I think generally when you look at sustainable development, if you look at sustainable growth of an economy, I think everyone is now really appreciating. They're not thumbing their nose at those small business owners because they see the role they play.
So anyone going through, any entrepreneur going through this program, the Inuka program, is it a guarantee now that once you go through this, that probably you'll be perceived as a better borrower by the banks?
Yes, you will be perceived as a better borrower. First of all, you'll be a better business owner. So that's a guarantee. But you certainly will be seen as a better borrower.
So once I go through this, chances of me getting a loan from a bank are much higher?
Yes.
Okay. But beyond this, is there any other incentive, any other proactive approach that you have in as far as people who are not entrepreneurs are concerned, in as far as lending?
So, in as far as lending, I think...
or until the the rate cap is removed, the situation will remain the same. No lending to anyone else who's not probably an entrepreneur.
No, I wouldn't say that, because if you look at how capital is being allocated, there's the trade area. But banks also lend. If you look at the mobile applications, bank lend to households as well. I think what's happening is you're seeing a lot more competition for certainly salaried employees. I've seen a lot of competition in that space. When you look at the industrial sectors, if you look at the real estate sector, manufacturing, transportation, telecommunications, you're still seeing a lot of activity there. So as much as we're really talking about the Inuka Enterprise Program, that's not to say that the portfolio has shifted. Definitely after the caps came into place, we saw a swing. We saw banks really move away from agriculture, move away from manufacturing, move away from real estate as well, but we're now seeing the lending coming back. So I think it's our portfolio overall is diversified.
Okay.
Yeah.
And so how does someone interested in getting into this program, how do you go about it?
Yeah, Fred, thanks for asking.
Yes.
If they go to inukasme.co.ke, they'll be able to register for the program. We're right now enrolling for face-to-face training in Nairobi and Nakuru, but the online platform, which has a similar course, is available 24/7.
inukasme.co.ke.
Yes.
Is there any cost implication to it?
It's free. I guess the use of your data bundles, which now is more expensive because of the taxes.
Okay. A final question. I have to ask you this. The CS Treasury has said he will revisit that rate cap debate. But looking at the market right now, banks are not doing badly. You continue recording reasonable profits, maybe not the kind of profits you were recording before that. Why would you insist on a removal for that of the rate caps? Here's
where I'll become skeptical. The way you're hating on banks, I'll hate on the media. I think the media really focus on maybe just 5 banks when they talk about banks are doing well. If you look at the tier 2 and tier 3 banks, several of them issued profit warnings, several of them had losses. So it is not correct to say that all banks are doing well. Certainly the bigger tier 1 banks are doing reasonable. I mentioned earlier that right now Treasury is borrowing at 12.6%. Okay, so if you're going to lend, you probably will lend to the less risky borrower. That's why they're still having decent returns.